Robert Kiyosaki, author of Rich Dad, Poor Dad, often says, good debt is a powerful tool, but bad debt can kill you. If you want to use debt to grow your business but not get caught by its destructive power, keep watching, because I'm going to show you 3 ways to safely use debt without doing what my family did. Lose millions of dollars, lose the business, and lose years of work. My parents started a business in 1983 in the middle of the biggest downturn in the oil patch in history. My father had been a salesman selling industrial valves and pipes into the oil field for 20 years before this big downturn. And he knew the business. He was a very good salesperson, but the company he had been with went under. Nobody was hiring salespeople for these products at that time. He had to start a business. And he used some of his contacts, got some business, turned profitable, and started growing it. Decade later, $20 million of sales, multiple location. It was a good business. He started to expand the borrowing, to borrow more to be able to buy inventory. We'll get into a little bit more about that inventory, but he did that after about 10 years into the business. The business kept growing and business kept moving forward until the downturn in 2001 hit. It wasn't a huge downturn. Most people in the oil industry barely remember it, but it was very consequential for my family's business. So the challenge for my family was we borrowed against a risky opportunity. The inventory was stagnant. It didn't sell. It didn't turn over. That was misjudging the risk. My father was sure that there was going to be an opportunity in the market and that there would be a huge spike in demand and he'd be able to sell all the inventory and make millions of dollars. These types of experiences are not unique. Over the years, I've seen many businesses run into similar situations where they misjudged the risk and plunged into the business opportunity anyway. One situation was a maintenance and service company that grew rapidly, but the rapid growth burned all their cash. It took longer for their customers to pay them than pay their employees and their suppliers. They got upside down, got into big mess, had to shut down. Another situation was a software company where they misunderstood the cost of delivering their service. They really didn't account for the cost of selling their product. Not completely uncommon for software companies, but it really hit them hard. Another situation was a company that produced fracking fluids. And about a decade ago, fracking fluids were selling like crazy. They had ramped up the business, invested in the facilities to produce these fluids. But when there was a downturn, they weren't ready for it. They overinvested and they got caught, turned upside down. Another situation was a chemical company expanded geographically. It was actually an international expansion. They didn't really understand some of the business practices and political situations, and they got caught. So betting on situations where you don't fully understand the risks is not a unique situation, but it happened to my family. The result for my family was the bank called millions of dollars of loans. They took the inventory, they took the business, and they also took the securities, the stocks and bonds my family had pledged against the loan. Basically, all the financial assets of our family were gone. Bank forced the company into bankruptcy. My family lost basically everything from a financial point of view. Lessons learned: know your strengths and your weaknesses. My dad was a fantastic salesperson, top of the line, really good. The good news for him is he continued on as a salesperson for other people and did quite well. But know your weaknesses. If you're not a geopolitical expert, if you don't really understand the history of another part of the world, that was the situation for my family, then you have to be very careful about which bets you make. Do you understand the country you're going into? Do you understand the nature of the business? If you're in software, but your background is in staffing, that could be a problem. Many examples. So learn to quantify your risks and know your strengths and weaknesses. There are so many opportunities out there to get the big win without the big risks. Those are the ones you want to find. So Manage the risk. If you are really not the expert in the subject, find an expert, talk to them. Second, evaluate the risk and return. Did you do the math? Did you really do a calculation to understand if the reward compensates you for the risk? There's many times you can change the size of your bet to match the risk. Helps offset the risk and reward balance. Other things you can do is take the risk and break it into stages. So, okay, let's just bet as little as we have to learn about what this one step is. Once we do that, we can evaluate the next step and the next step. Great way to manage your risk and reduce the total liability or risk that you face. Keep in mind that when you're betting a company, you're betting family, the stress, the conflict that happens when you have a business that doesn't make it. Your number one job is to keep the business going so that it can continue to support your family and your investors. Hope this video was interesting to you. My name's 𝐅𝐫𝐚𝐿. Check out our YouTube channel for more videos about business and funding for acquisitions, rapid growth, and turnaround.